Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. The question bar is open, folks. If ever you have any questions, feel free to ask them. Just to make sure, do we all have all the questions? Thank you. So questions, folks, this show is going to be mostly dedicated to your questions because in terms of the market situation for swing trading today, it's still a no-go. What happened with the news here is that, first of all, we had a news concerning Greece, where the creditors say to Greece that, look, you have 48 hours to come up with a plan that actually satisfy our requirements. So with this news here, we know yesterday gold was going down. Today it continues to go down so far because there's still hopes that they will find an agreement. But gold stocks have resisted slightly. However, with this beginning of a neutral formation on the gold sector, I don't think it's appropriate to be in a buying spree on this sector. For instance, a stock like OceanaGold. Okay, well, the fact that the stock is slightly a little bit higher than this support there, even if there's a resistance there, I think building up your positions within this side of formation could be appropriate, but I would not open a full position. And also, you have to make sure that, look, if you're buying that positions here, this is the loss potential you're going to have to tolerate. So below 267, you're going to have to close your positions on OceanaGold. Primero Mining, so far it's not doing that. It's having a big correction. Semafo stays totally flat after reaching its target of 377, 379. So it's really a situation where we cannot say that gold stocks are in a situation to buy. Even the energy sector which has been one of the best performing sector. However, the sector remains, though, within its bearish corridor. So when a sector remains within its bearish corridor, it's not because we have an increase today that you should actually be in a buying spree. Max, just to make sure that I don't receive the questions in the tab here. So the energy sector here is not in a situation where you could be in a buying spree, simply because on the energy sector we actually don't have the reversal of this downward corridor. Are there some positions that could be at risk that you should close? Well, the only positions that you should close, I'm talking of the short positions, is the ones if ever we actually do have a reversal of this downward trend. For instance, on marketgurus.tv, We didn't close any of our positions in the energy sector. For instance, a stock like Jones Energy, the stock is still below its resistance. We recommended that stock as a short on marketgurus.tv here, so there's no need to close that short position. Kelt Exploration was recommended as a short here. It has not broken up this resistance, so there's no need to close that short positions. Western Energy, which was recommended as a short as well here on June 19, still maintained its downward trend, so there's no need to close that short positions on Western Energy Services. So it's really a situation where even if we do have some rebound in the energy sector, I don't think you should be in a rush to close all your short positions. We have decided to only close the ones where we have a reversal of this downward trend, and so for most of our positions in the analyst shares portfolio on marketgurus.tv, we're just in a mode where we continue to hold on to them. Now, two major news here I want to bring to your attention. First of all, Darden Restaurants, they will sell their restaurants and to a REIT. It's the same strategy that Loblaw did. It's a way for companies to generate some cash, because what they do is that they sell all their assets to the REIT and they lease those assets. So the thing is, the REITs buy from Darden, Darden gets some cash, and Darden's, instead of paying all the necessary fees to be an owner of those assets, well, he's only a renter, a tenant, and then just pays a lower fee. So that's actually some good thing for Darden to pay down some debt. Green Dot, they actually signed a contract with Walmart for the debit card, which is called Money Cards, and this has created some slight upward movement into small banks. For instance, Bank of America is continuing. It's not a small bank, but the banking sector, which Bank of America is part of, is actually going up. You have M&T Bank, which is breaking out, Huntington Bank shares, Key Corp, but a lot of those positions though are rising by less than 2%, so that might make those breakouts less credible. Bancorp South is also a breakout, but we could also consider those stocks as a pursuit of the bullish cycle. So if you want to get some exposure into those banks to benefit from the buzz that we have with Green Dot that's in an agreement with Walmart for the debit cards, it's actually an alternative you could do. So this is a list here of all those stocks. Most of those stocks that are highlighted with an S are all stocks that are actually breaking out, and they're mostly on the US. And on the Canadian side, in the next segment, we're going to take a look at the news on Blackberry. So Blackberry, folks, missed estimates by 2 cents. The stock is continuing to go down. This is what happened with Blackberry. First of all, Blackberry, with their earnings, their software sales have increased more than estimates. However, their smartphone sales has declined. And even if the stock is going down, I think the fact that we have seen that software sales have spiked up, it's a good thing, because it's in line with a strategy of the CEO, which says that he wants the company to be more focused towards software. So software sales have increased, which is a good thing. They also signed an agreement with Cisco, which will make sure that there will be no patent infringement between those two companies. So it's also a good thing for Blackberry there. Now the stock is going down. If you still have some positions in Blackberry, well, you know, I think that you should give it some time, right? Maybe some investors are disappointed with the smartphone sales that have not performed as much, but I think as long as the stock can remain above 1082, there's no need to close that position. Let's say you bought it here around those area, well, you had to close it on the break of that support there. And if you still have not closed it, I think the last chance that you have is that if Blackberry goes below 1080, then you're going to have to take a decision to close that positions on Blackberry. So we do have a lot of questions there. So we have one question from Mark. No Millennium. Is No Millennium dead? I have 50,000 shares at 20 cents. Well, Mark, first of all, staying technical, Mark, you should have got out of New Millennium when the stock broke that support. So when it was around 17 cents, that was the timing to close that positions in New Millennium. Maybe we were more for the long term on New Millennium, but it's a speculative stocks. What we know from New Millennium is that they have some challenges with Tata, with their partners. Tata want them to finance, I think, a feasibility study. New Millennium say, no, Tata, you need to finance it. So there's some battles between those two. So far, I've not seen any news saying that the partnership is at risk, but it happens in any partnerships. Sometimes there might be some miscommunications between the two parties. So the stock is taking a hit for that. I think also with the resources that are not so positive, with China's economy not growing as much as investors would like. The stock is also taking a hit. So you have all those factors: the resources price, the fact that they have some problems with their partners, with Tata, and I think this is those are two factors that explain this decline on New Millennium. Now, with 50,000 shares, I definitely found that it's really a lot. What I would say is that I would definitely start to close my positions on New Millennium. I don't know if you're a firm believer in this company, you want to have some exposure there, but staying purely technical, just to reduce my risk, I will at least close half or more than half on my positions on New Millennium, because there's no need to hold that positions, because look at this. Even at important support of 2014, 2015, we're going below that. So it's really, really negative for New Millennium. You might keep some positions just in case things turn around, but it might take a while, Mark. So this is actually my advice on this one. Ella, which stock should I buy? MFC or Sun Life? Well, look, Sarah, I can talk from Sun Life, because what I know is that Sun Life, they want to get some exposure on the Asian market. This is something I like, because in terms of insurance, Asian market has a lot of potential. Not a lot of people are covered, and they signed an agreement with a major partner in Vietnam, I think, to actually increase their market share. As concerning Manulife, I don't know much about Manulife. So far, just let's say purely technical, Manulife is clearly within a clear upward trend, so the goal will be at 2402. As for Sun Life, if we're staying purely technical, there's still all that top that's there. But just by looking at the news with Asia, which is something I love, because they're getting into Asia, a bigger market, I would invest in Sun Life for those reasons, only based on that. Staying technical, both stocks are doing pretty well, so it's really a choice of looking at what companies will offer you the best growth prospects. And if you're investing into those financial companies too, maybe you want to see what are the dividends. So if Sun Life pays a higher dividend than Manulife, maybe you could get into Sun Life instead of Manulife. Well, so try to take a look at that for also as well. But me personally, because of their target towards Asia, that is a big insurance market, I'm more bullish on Sun Life than Manulife.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have one question from Mario here. What's your analysis for PLI and SWY? PLI, stock that's right now starting to form a basis, starting to confirm a bottom. It's testing the low of this important upward trend. And we've seen that in the past. Whenever the stock tested this upward trend, that's where we had a rally. So it's at a point where you should watch PLI. Now, what other odds? Should you buy that stock now? So far, it's not clear with the stochastics. We have not seen a wave of buyers yet, because we need a stochastics towards 30-40%. Histogram starting to be towards positive territory, but not there yet. The thing is that in PLI, look at this, all those moving average. So let's say that the stock stays there above 218 for 2-3 days, right? Can go above 230. That would be the point where I would start to buy some positions on PLI. My exit point on the reversal of this important upward trend, so let's say below 216. So 230 as an entry point, 216 as an exit point. Now, the risk is that you will build up your position. So you not open a full position. Why? Because all this congestion there around 239, 240, which corresponds to that resistance, for me, it's a risk for PLI. So there's a possibility to build up your positions around 230. The stock will pause towards 246, technically speaking, with all those moving average that are there and this resistance. And higher than 250, that would be the point where you could open up full positions on PLI. But if you open some positions at 230, around 216, on the reversal of this upward trend, this is where I will get out on PLI. Now for Stornoway Diamond, this position here, I think it's kind of too late to get in, because look at this. The stock is reaching the top of an upward corridor, right? This is the top of an upward corridor here on Stornoway Diamond. Also, Stornoway Diamond, let's put the Fibonacci retracement from that top to that bottom. We see that we have reached the 50% retracement here on Stornoway Diamond. So which means at this point, with the weakening volume, with the fact that it's testing the top of its upward corridor, it's a stock that's going to stabilize. So you need the stock to stabilize first, and only a higher than 85 cents, the stock will be a go. So both positions, Stornoway and PLI, are not buying signals. I think Permatic Life Science could be more in a situation to buy it sooner, only and only if we have stochastics towards 30%, if we have the stock that can go above $2.30. And as for Stornoway Diamond, I think it's more to wait because the stock is due for stabilization phase. That will begin up now because volumes are declining. It's top of an upward corridor. The retracement of 15% has been reached on Stornoway Diamond. Now, Chris, SOG, a possible breakout. Could be a possible breakout, but on that stock, higher than 23.43. No insider sales over the past 12 months. Well, I cannot confirm that because I've not made my research on that. But yes, higher than 23 cents, 24 cents is going to be a breakout on SOG. Right now, the stock is neutral. I would not get into it right now. One question from Pat here. Should we get out of HED bought at 1588? So you bought here at 1588. Pat, look, stay technical. Let's connect the bottoms here to see what is the down upward trend on that stock, on that ETF. So you see so far, the trend is your friend. HED has not reversed this upward trend. So as long as HED doesn't go below 1474, because at 1474, we will have the reversal of this upward trend. You should not close it. You hold on to HED. You should not panic with this rebound today on the energy sector. You should only panic if ever you see the energy sector on the TSX going above 215. Because why? Higher than 215, we will reverse this downward corridor, and that will be a signal that the buyer's momentum is back on the energy sector. And as for HED, I would suggest you to hold on to it. 1474, 1470 will be the exit point on that ETF. So far, the trend is your friend. I know it's frustrating to see that correction, but I don't think you should panic on that correction today for HED. What about ON? Well, what about it? The stock broke out yesterday. Now it's a pursuit of the bullish cycle. I don't know. Stock. You know, the thing that's hard with those venture stocks is that when they have done nothing for the past months, years, and finally we started to see some activity, more volume on that stock, we cannot really rely on the indicators because they kind of bias, because they take a look also at all those data from the past, and the fact that the stock has been less liquid and now it's becoming liquid, I cannot really rely on the stochastics or on the histogram to actually determine what's going to be the next target on One Roof Energy. So for me, on a stock like that, I don't know much about it. I don't know nothing about it, actually. I think if you didn't get in yesterday when we recommended that stock as a buy on Market Gurus.tv, right now it's kind of too late. I think what you should expect maybe to see, can this liquidity be sustained? So normally speaking, technically speaking, what we coach on Market Gurus.tv is that the next entry point is going to be if the stock could form a sideways formation, and then break out again. So two reasons why I can give you an advice in this anon is, first of all, because the indicator is a bias because of the lack of liquidity for the past few months, and this recent liquidity here, I don't think that you should only base yourself on this recent liquidity to buy that stock right now, even if it broke out yesterday. I think to stay technical, you need to see, can this liquidity be sustained? And the next entry point will be, if first, can the stock stabilize and then break out again? And so far, I'm just making a scenario. It could stabilize here, but it could stabilize in another place as well. And this is why I cannot really give you an advice on Run-Roof Energy anon. Now, as for the best day trade of the day, it's ICLD. The thing that we like with ICLD is the several entry point that the stock gave. It was recommended since opening on marketgurus.tv. So look at all those sideways formation and all those breakouts. Those have all been all those entry points. So one entry point here, another one there, another one there, another sideways formation, another breakout. And now the next entry point is going to be a higher than 305 on the break of all that important resistance on ICLD. If you got in here, you should not panic. Your exit point becomes below that support, so below 293. But now if you didn't get in towards all those entry points higher than 305, that's going to be the go on ICLD. So I'm going to take Eve questions tomorrow. And as for today, folks, energy stocks are the ones that are taking the lead, but you should not rush to close all your short positions in the energy sector. Pat mentioned, for instance, HED. I don't think HED should be closed today. And as for the other stocks, though, really in terms of the buying signals in the market, it's a market where we still advise to stay on the sideline for swing trading, simply because the Greek situation is still something that's going to weigh into the market. I think it's better to wait for 48 hours to see how it's going to play out and start to trading either the resources, because to get into the mining or gold stocks right now, I think it's too risky. It's not worth the risk. So that said, see you tomorrow at 12:30 on the Swing Trading Show. And never forget, the more money you make, the happier we are. See you tomorrow.